you're talking about tapping into this. So this is the chart as of today, 900 trillion total global assets. And Jesse, you've referenced this 300 trillion just for bonds, and that is really what he's going after. If you go to this slide, this is where he's saying we're at in 2045. And what I would like the person to kind of look at is the total global value isn't 900 trillion now, it's 4,000 trillion is the number that he has listed for everything collectively here. What I find fascinating is if you take the original 900 trillion and you compound it at 8% through this 21 years that he has laid out from when he did this presentation, you come up with exactly 4,000 trillion.
Mm-hmm.
What he's doing is he's just showing the expansion of, global M2 or US M2 and using that as, hey, these fiat monetary units are going to continue to grow. And if they do, this is how I think these major buckets of asset values are then going to be priced. What's interesting is bonds, it goes from 300 trillion to 840 trillion. But if you're looking at it as a ratio from the total global amount of 900 to 4,000, what you see is that it's a reduction in the ratio. And what I did is I took these two charts. The one on the left right there is the first one we were looking at. The one on the right is what this is 21 years later. But then what I did is I showed like a multiple of each one of these categories to show where things are leaking and where things are being basically propped up or life basically being breathed into them. And just the total number of units going from 900 trillion, and this is this top line total units, 900 trillion to 4,000 is a 4.4x multiple over those 21 years. So anything under 4.4 is something that's losing value over that period of time. And anything above that is gaining value or getting more valuable over that period of time. And what you can see is down here at the bottom, his projection is that Bitcoin's going to go 140x as opposed to what every other category, if everything just remained neutral and everything was just being, inflated by, the monetary units, it'd just be 4.4. And where you see everything basically coming out of is gold and bonds. It's interesting to me how he has taken your chart and really kind of expressed it and talked about it in what I think is a really thoughtful way.
Yeah.
And his whole thesis as to, well, why is this all accumulating into Bitcoin and not going into fixed income? And it's like, there's no tax ramifications if you never sell. You don't have to sustain it like a property. You don't have to do like all of these different things that, you listen to any conversation that he's having, he's laying out all these pieces. But when you look at a chart like this, that's very holistic as to his whole grand master plan of like how he sees Bitcoin playing out, all those little sound snippets and all those little sound bites help you to see this and visualize it way clearer as to why he thinks that so much of that value is going to come to Bitcoin. And these four things that we just talked about within his company are, how would we describe them? Almost like volatility capturing,
Pumps.
Yeah.
Yeah.
Pumps of legacy financial tools to pump that value into Bitcoin from, what Wall Street, all this jargon and all these terms that we're throwing around. He's using those mechanisms to point all that buying power towards Bitcoin. It's really fascinating.
Yeah. Yeah. You nailed it there. That's his whole understanding. What's going on is that bonds and gold and fiat money will lose some of their monetary premium. In the economic conditions that we're in now and will continue into the future,